Hi students, let's have a quick review of today exam paper CA Inter Cost and Management Accounting January 17th 2025. Overall review, what I can say, paper is dead easy. Most of the questions are covered from Masterminds material. Exactly 100% covered. Some questions. So students very happy. So let's start the review. So this is the part 1, sir. MCQs. This is the first one. EOQ, material cost chapter, sir. Calculate the carrying cost per unit. So here questioner is asking calculate C value. Second question, sir. This is standard costing. So here standard variable overhead rate per hour. That means budgeted variable overhead cost divided by budgeted hours. Then simply we get standard variable overhead rate per dead easy. Next case scenario question, sir. So this is the question. ABC chapter, sir. This question relates to ABC chapter, activity based costing. So first time, sir, ABC chapter has given as a conceptual basis. So here time saving, sir. So here questions are very simple. Under activity based costing system, the amount of allocated overheads attributable to machine running hours to product X. Nothing but CDQ of product X, sir. Next, the total cost of product Z as per activity based costing method. So first calculate the overhead cost, next material cost, next labor cost, add them, we get the total cost. Next, what is the overhead absorption rate per hour as per traditional absorption costing method. So your driver name is hours, sir. So entire total overhead cost of the firm divided by total hours, then we'll get overhead absorption rate under absorption costing method, sir. So what is full cost per unit of product Y under traditional absorption costing method? So first of all, calculate the rate under absorption costing method, then calculate the cost per unit, material cost per unit, labor cost per unit, next overhead absorbed overhead cost per unit, add them, will get the full cost per unit, sir. Next, under an activity based costing system, what is the cost driver rate for machine setup cost? So here machine setup cost overhead amount divided by number of setups, sir. So then we'll get the cost driver rate. So dead easy question, sir. This is the ABC chapter, sir. Next, case scenario 2, sir. Case scenario 2, sir. This question related to budget and budgetary control, sir. So this is also very easy question, sir. So the budget variable cost of production of 1 unit of product P, it includes material cost, labor cost, next variable portion of overhead cost, add them. Next, what is the budget net income for the year, sir? Sales less variable cost, contribution less fixed cost, we get profit, sir. Next, number of units to be produced for product P. So calculate the production volume. Sales in quantity plus closing stock in quantity minus opening stock in quantity. Next, total quantity of raw material or purchase during the year. So raw material purchase quantity, that means raw material consumption plus closing stock of raw material minus opening stock of raw material. So that is the raw material purchase, sir. So total cost of purchase, that means raw material purchase into unit price of raw material, then we'll get raw material purchase in rupees. So this question also very easy question, sir. Next, the 13th question, 13th one, sir, 13th MCQ. So this is the Standard costing, sir. Overhead volume variance. So budget volume 40,000 units, sir. Actual volume for the month of March 48,000 units, sir. So here volume variance favorable, sir. So 8,000 into rate per unit, 78,000 rupees divided by 40,000, then we'll get the rate into excess volume 8,000, sir. So then we'll get the answer. Answer is favorable, sir. I think B, sir. Trick B, because here budgeting volume 40,000 but actual volume more than 40,000. So here excess volume, sir. Definitely volume variance favorable, sir. So see the option, sir. B is the correct answer, sir. B is the correct answer. So next 14th, sir. This is the joint and byproducts problem, sir. This question related to joint and byproducts. So this is the joint cost 60,000, sir. So here question is asking calculate the joint cost per unit of product Y. So first we apportion the joint cost under the given method, that is the net realizable value method. Then divide the volume, then we'll get the per unit cost, sir. Next 15th, calculate the cost of normal idle time and abnormal idle time. So this question related to employee cost, sir. Next 15 questions are 15 to 30 marks. You can easily get the 30 marks, sir. So maximum time 40 minutes. Maximum time. Okay. So next part 2, sir. This is the part 2. So this is the marginal costing, sir. Calculate the break-even sales in value for each mission. So for each mission, break-even in rupees equal to each mission fixed cost divided by contribution per unit, sir. Then you can easily get the break-even sales. Next, calculate the sales level units where both the missions are equally profitable. Indirectly, that is indifference point, sir. Indifference point, that is the change in fixed cost divided by change in contribution per unit. So this is the very, very simple question. First year, 1 year question, sir. Next 1B. This is the batch costing, sir. This is the batch costing. So here also mixed with the marginal costing, sir. Contribution per unit, simple, sir. Selling price per unit minus variable cost per unit will get the contribution per unit. Next, calculate the company's total monthly profit, sir. So here monthly number of batches, 10 batches. First we have to calculate the one batch total cost, then multiply with 10. Then you can easily get the monthly profit, sir. Next C, 1C, sir. So this is this question related to material cost, sir. So here lead time, normal lead time, average lead time, that is the normal lead time 7 days, sir. So that is the maximum plus minimum by 2 equal to 7. Next difference, sir. Difference between maximum and minimum 4 days, sir. So solve the equations, we will get the maximum lead time, minimum lead time, normal lead time. Then here reorder level, reorder quantity, minimum stock level, maximum stock level. So here maximum stock level 1 lakh units, minimum stock level 1 lakh units, maximum stock level 1 lakh 90, sir. So then you can easily calculate the maximum consumption per day and minimum consumption per day, apply the formulas, then you can easily get the maximum consumption per day and minimum consumption per day. Next 2A, sir. Second question. So this question relates to cost sheet, sir. Here raw material purchases, sir. Packing cost, fee paid to independent directors. So all cost elements, familiar cost elements, sir, dead easy, sir. So here fees paid to independent directors, that is the general admin overheads. Production bonus paid to factory workers, that is the direct wage cost. Job charges paid to job workers, direct expenses. So salary paid to supervisor, that is the salary paid to supervisors. Wages paid to factory work. Wages paid to factory work is nothing but a direct wages. Salary paid to production control manager is nothing but admin overheads related to production. So sale of scrap generated during the manufacturing. So that is the it should be deducted from factory cost, sir. So selling overheads per unit, salary paid to general manager. So that is general admin freight inwards. So expenses paid for quality control check. So all these elements, very, very simple elements, sir. So here factory assets, factory building, plant and machinery. Next, office assets also provided, sir. So calculate the depreciation. Next, stock levels also provided. Next, the rate of profit is also provided, sir. Then you can easily calculate the factory cost to prime cost to factory cost to cost of production. Next, the cost of goods sold. Next, cost of sales. Then compare with the sales amount, we'll get the profit, sir. So very easy question. So no adjustments, just the depreciation calculation, that's all. Next, B point, sir. 2B, this is the material employee cost, sir. This is the employee cost. So time rate per hour, that is denoted by R. Time allowed, that is the standard hours allowed. Next, the time taken, AHA. So here just 3 hours time saved, sir. So here question is asking Halsey scheme. So you can easy or Rowan scheme. Which one is the which option should be selected, sir? So calculate the earnings under both plans. So apply the values. You can easily calculate the earnings under Halsey. You can also earnings under Halsey and earnings under Rowan. Next, 3A. This question related to process costing, sir. This question is related to process costing. So 8 marks question, sir. So this is the primary question, sir. No inventory levels of work in progress, sir. Dead easy. That is the first model. So here all units are fully completed. So process X account, process Y accounts. So here clearly mentioned beginning or ending work in progress levels or stock levels nil, sir. So that is the part model 1 question, sir. So simple question. Here question is asking process X account, process Y account, normal loss account, abnormal gain account. Next, 3B question, sir. This is marginal costing, sir. So here first alternative, reducing the selling price by 10%. So automatically sales volume increased by 15%. So second alternative, third alternative. So calculate the each alternative profit levels, sir. So which one is the best? So this is the decision making question, sir. This question related to marginal costing. So this is also very easy. Next, 4A question, sir. So this question related to service costing. So that is the passenger transportation segment. So first of all, we have to calculate the passenger kilometers. Next, operating costing statement. So here question asking, you are required to calculate the bus fare to be charged per passenger kilometer. So total takings divided by passenger kilometers will get the fare rate per passenger kilometer. So here no adjustments, sir. Fair question, sir. Very easy question. Next, 4B, sir. LMN Foods is a manufacturer of organic snacks. For the year ending 2023, the company compiled the following financial data. So that is the past information. So this information is used for calculating the overhead rates. Next, order details are given. So this question related to job costing, sir. So first bit questioner is asking, first bit to calculate the overhead recovery rates. Second bit calculate the sales amount, sir. So this question is related to job costing, sir. Next, 5A. Same question, sir, in our material, that is the standard costing chapter. Same question, sir. As this question in our masterminds material. So 5A question. So dead easy question. So this is the standard costing, sir. 6 marks question. You can easily get the 6 marks, sir. Next, cost accounting system, sir. So 5B. Here cost accounting systems entries, sir. Wages paid. First wage control account data to cash account. Wage control account data to cash account. So integrated accounting systems, sir. All accounts are maintained. So wage control account data to cash account. Next, direct wages 80%, sir. So work in progress control account debit to wage control account. Next 20% factory overhead control account debit to wage control account. Selling and distribution what's incurred. Selling and distribution overhead control account debit to cash account. Next, deficiency found in stock of raw material, normal, sir. So that is the factory overhead control account debit to stores ledger control account. Next, factory overheads under absorbed profit or loss account debit to factory overhead control account. Just 2 minutes. Next, this is the theory question, sir. This question related to material cost chapter, sir. So, treatment of defectives. First one is normal, sir. Second one is abnormal, sir. So, in case of abnormal, directly transferred to costing P&L account. In case of normal, that is treated as a factory overheads. So, this is the easy question, sir. Next, sixth question. This is also theory question, sir. Explain the steps involved in procedure for reconciliation of cost and financial accounts. Step 1, find out the cost records profits. Step 2, find out the financial records profits. Next, reconcile them. So, in case of reconciliation, 5 points, very, very important points. So, first one is pure financial expenses or non-cost related expenses are appearing only in financial books, not in cost books. Second point, non-operating incomes. Third point, depreciation. Next, inventory levels. Next, nostal items. So, these are the very, very important question. So, here this question is also covered in our material, sir. So, dead easy question, sir. 6b, cost unit, sir. So, industry names provided, cost unit is given. Cost unit is asking, sir. So, cost unit, it is the unit of product or service in relation to which cost may be expressed. So, that is the cost unit definition. So, no need to write the cost unit definition, just only put up the cost unit, sir. Okay. Next, explain the methods that can be used for controlling selling and distribution overheads. So, this is also direct question in the in our material, that is the chapter name is overheads chapter, sir. Next, this is also overhead chapter, sir, that is the cost of the service departments. These are the department. These overheads are apportioned on what basis? So, just the question is asking basis. So, this is also straight question, sir. So, this is the cost and management accounting question paper, sir. So, this attempt question paper is dead easy, can easily get good marks. So, most of the students are very, very happy, sir. So, okay, all the best for next exam. Okay, thank you.